I see that more people have joined us. I'd like to warmly welcome you to WAPI 2022. It promises to be an exciting, engaging, insightful 2 days. And of course, we'll be networking with industry players. We should look forward to an amazing time. We have a lineup of distinguished thought leaders, speakers who are here who will be doing justice to our theme for this year's summit, which is New Frontiers in the New Normal. Like I said earlier, we have been presented with a new normal post-COVID, so it is very important that we actually have these conversations. So very quickly, I'll introduce our first panel for WAPI Summit 2022. This will be looking at institutional investments in West Africa, a new frontier of opportunities for funders and developers. Please join me, let's make welcome the head of real estate finance for West Africa at Stanbic IBTC. He'll come up stage to bring up other members of his panel. Now, this man has been actively involved in a number of real estate industry advocacy committees set up to engage key regulators to unblock constraints to catalyze the growth and development of real estate investment trusts and creating affordable housing solutions. Ladies and gentlemen, please make welcome Mr. Tola Akinhomi with a warm round of applause. Thank you. So he's upstage and he would have the honor to bring up other members of this conversation. Thank you.
Thank you very much. Good morning, ladies and gentlemen. Thank you for making time to come for this WAPI Summit, and I'm glad to be moderating this panel discussion focused on institutional investments in West Africa. The key theme that will be driving that is really around how to catalyze the growth of REITs in the market, given some of the positive reforms that we've seen from the regulators, and the impediments and also solutions, and what is critical for both the investors as well as the developers, the creators of the asset, as well as the segment that also requires those assets for the eventual returns. It's a full ecosystem, and I'll be joined on the panel session by participants that cuts across both sides. So I'll please ask that Pierre Grunwald from Novare, who is a leading developer within the market, come up on stage as well. Patrick Ilo Dianya, who manages SFS Capital, and they have a listed REIT currently on the market, Sky Shelter Fund. Please come up on stage. A round of applause, please. Onyeda Akinyemi, Head ECM Equity Capital Markets Execution for Africa, Stanbic IBTC Capital. And last and not the least, but quite a key person in this room is Oguche Aguda. Is the CEO for PENOP. It's an association that that manages pension firms, and that's a key capital stock for the asset class. So welcome on stage as well. Okay, so it's going to be quite a relaxed and formal conversation. I think what we've seen in the market over the last 10, 15 years, it's really growth, right? We've seen huge capital formation, both from a local perspective and also offshore perspective, creating many of the diversified many of the diversified asset classes, from retail to offices to industrial. We're seeing growth in the space. Even despite the pandemic, we've seen a recovery within the market. We've also seen the regulators support, both on the SEC side, on the FRS side, in terms of the necessary reforms from the tax efficiency that is needed to drive REITs, as well as regulatory framework to also create these instruments. But there's still some gap. So I think before going ahead, I would, what I'd like to really glean on from, and I think this is really targeted at the developers, that why are REITs critical, for institutionalizing the real estate market? Because that's critical. Because if you think about where we're coming from a capital formation stage where you then have the assets, plus you then need to complete the cycle. So what role does REIT play? And Pierre, I don't know what thoughts you would have from that perspective. I think there's a problem with the mic. Can we please be helped?
Thanks, Tola. Obviously, from our point of view, and as you know, Novari has been investing in property development in Nigeria for more than 10 years now. Our first asset, Novari Apu, has celebrated its 10th birthday in June of this year. And we believe the market is now ready for institutionalization of the property and real estate industry. You can see across the globe, that's the way in which property has moved, because what that does is it unlocks pools of capital and hence then obviously have a direct impact on property development in the future. So institutionalization of real estate is critical to unlock those capital pools. And then also, obviously, what that brings is then the efficiency in the property, in the real estate market. It opens up to investment. And then also what that does is ensures that there's quality assets and quality maintenance of those assets, which then ensures a efficient and a growing income stream to investors, which is critical. So from our point of view, real estate investment trusts are very extremely important.
Can we be up with the mic? It's a bit difficult. I think, Per, that's very useful background and context from your perspective. Patrick, would you like to add a bit more just on that context, given that you manage one of the existing REITs in the market? I mean, from your experience, how has that proven to drive that institutionalization? Because I think that is what is critical, so that we can galvanize pools of capital, pools of assets to create more REITs. So what's your experience? And yeah, please.
Okay, thanks a lot, Tola. Real estate investment trusts are actually very, very important, as you've alluded to. And you mentioned that we manage a REIT. We actually manage two real estate investment trusts, SFS REIT and Union Homes REIT. And the beauty of the real estate investment trust goes to do with the tax protection and also with the structure and the fact that it is regulated. With the real estate investment trust, it's run like a collective investment scheme. So you have a custodian, you have a trustee, you have a registrar. The entire structure ensures that there's a lot of checks and balances, and there are a lot of people reviewing the decisions. Then also you now have all the tax protections that are granted to them. And thirdly, and most importantly, you have the fact that it's listed so you can trade. But for some reason, REITs have not become very popular in Nigeria. And a lot that start due to one or two or three reasons usually are not as successful. You cannot separate the fact that REITs are struggling from, first, the fact that the whole country is struggling, first. then the fact that businesses in Nigeria are struggling. So, and the fact that equities are also struggling, because the REIT is an equity also. So you can't separate it from all this. But now the issue is there are ways to sort of isolate it from some of these things in terms of the structure, and also make REITs quite successful into the future. Yeah. Thanks very much.
Thank you, Patrick. I think that's that point. If I listen to Muyiwa, one can get depressed in terms of the realities of the market. But I think the point really is that real estate as an asset class is long term, is defensive, and I think you made a point about the equity-like nature as well as the bond-like characteristic as well. So thanks very much for that addition. I think this will go to Mogoche firstly, and it's really what are the opportunities given what we've heard, and given that you manage the pool of real capital that will seek that the market is looking to galvanize various asset classes, especially REITs. And I know there are some work that you're doing there. So what are the opportunities for investors? What's your thought in terms of rate of returns, in terms of valuation, and really what is the size of the pie? If you can just shed a bit more light there.
Thanks, Tola. I think, I'm not sure about the opportunities. If I want to just jump onto what Patrick said, REITs are struggling, equities are struggling, economy is struggling, so why should pension funds invest in that? But having said that, I think there is a big opportunity, like you said, because they provide a defensive asset and it's long term. So from that point of view, there's room to engage. And like I always say, the REITs, and just jumping on what Pierre said also, they provide a system whereby it's transparent, it's listed, and it's structured. So on the face of it, it seems like something that pension funds should get involved in. But I guess we can't divulge it from the general macro environment and the fact that it is struggling. With regards to percentage of what pension funds can invest, I believe they can invest up to 10% in equities, or probably even more in REITs. I think the challenge, and what we probably need to discuss on this panel even more, is why are they not getting there? Why are they not investing there? What do we need to do to get them to invest more in REITs? It's an asset class that world over seems profitable, seems something that they want to, but in Nigeria it's not happening. And I think, oftentimes we take some structures and we bring it from offshore and we bring it here and we haven't localized it. And I think perhaps we need to do some more localization to ensure that pension funds can invest in REITs, which on the face of it seem like something that they should invest in.
Yeah, thanks. I think you kind of already are reading my notes, because what you just shared there seems to be where we'll be going to. And I think Moinda, given our role within Stanbic Capital, you make the point about, of course, the equity capital, the equity markets, and how that is fed, as well as there have been challenges, and I think there has been progress made in terms of unlocking some of those constraints. So I think we are at the period where it's testing some of those some of those policies. You have a pool of assets that are ripe, and if you don't create the exit and liquidity for those assets, you can churn the cycle, because I think that is what is critical. So I think, I know from the work we do together that a critical part is the investor education piece. And if I think about what this panel session is doing, how do we bridge that gap between past performance, knowledge of the assets class, and what future performance can be to increase knowledge and appetite? Can you share some thoughts around that, please?
Thanks, Tola. So I believe the REIT sector in Nigeria is still very much in the fledgling stage compared to the experiences in other developed markets. And we've had, investors have had a foray into the REIT product. We have 3 REITs listed on the Nigerian exchange, and it has been a mixed bag for many of them. And it's not unusual that when there's a new product, there's a new venture, that there are teething issues that are experienced here and there. The last REIT that was listed on the Nigerian exchange was in 2013. And since 2013, there has been a lot of progress. There has been a lot of development in the quality of assets, in the regulatory framework, that is available out there. And it's important that investors, begin to, like Patrick said, sort of disconnect what has happened in the past to what is potentially doable within the sector. And so it's important that the investors, continue to engage and, some of the things that make, what are the things that make a REIT successful? It's things like the quality of the assets, it's things like the quality of the sponsors, it's things like the quality of the lease agreements. And I think that information is gradually being made available in the market. And so we have a number of institutional investors already who are already beginning to question some of these things. And so that engagement with sponsors is very important to understand the progress made in that sector and what sort of asset quality is available. And it's in those engagements that investors learn more, and you can ask questions, and you can begin to understand what is actually an investable product and what is not an investable product. So I think that journey is one that has started and needs to continue. And as investors continue to have those engagements, I think there's more information, there's more knowledge, and they're able to make the right decisions when it comes to investing in real estate products.
Thanks very much, Oyindayi. That's very useful. You mentioned, I think there are 3 key words there: quality of sponsors, quality of the assets, and there was one more. Uguchi was just saying it.
The lease, the quality of the tenants, and the underlying agreement.
Great. I think those are profound, and that's really, thank God we have a developer here, and there are assets to show. So this is for you. And I think the question is, given your experience in development and management of real estate assets, what's your investment philosophy around asset governance? Well, I think this is quite critical, and ensuring that assets are de-risked and stabilized, because for them to form part of the REIT portfolio.
You can steal your mic. So firstly, just to clarify that obviously Novare is only investing in commercial assets, so please take the comments in context. But from our point of view, obviously, as Yinda's already alluded to, quality of assets are paramount, and then also obviously quality management of those assets, which means there's longevity in those assets and the quality remains throughout the life cycle of that asset. But from an institutionalization point of view, we've always believed that we need to, and from a philosophy point of view as well, to have a very hands-on approach. You need to be close to your asset. You need to understand your asset. Hence, we've been done all our services in-house, which has proven to be the correct strategy since we commenced property development in Nigeria and across the continent. What that means is we have the key relationships with our key stakeholders. That means that from a mitigation of risk point of view, you can have direct contact with your key stakeholders and can adjust your operations as quickly as possible to ensure you mitigate whatever risk may arise. We also have always believed in low levels of debt. Sorry, Tola, I'm actually not speaking in your court as a banker, but what that means is also that you're not coming under financial pressure, as we've seen throughout COVID. Our assets were really deleveraged to a large extent, but also again the direct relationships with our bankers has meant that we could adjust the gearing quite quickly and hence put the assets on a better financial footing, which has been paramount in helping us through this difficult period. Speaking to the challenges that we face, and obviously that's accessing the institutional pools of cash in the country. Obviously, you get compared against what bond returns are. Nigerian pension funds are used to investing in government bonds, but as we've seen in the previous presentation by Muyiwa, and Muyiwa, that was an excellent presentation, thank you for that. Yeah, you can see the interest rates are going up, but at the same time, inflation is running about 6% higher than what your 1-year T-bills are. Hence, you're investing in assets which are giving you 6% negative real returns. So from a pension fund point of view, obviously it's difficult because you're investing in an asset that doesn't deliver the income that you need to pay your beneficiaries. Now, obviously from a property point of view, your income or your return is two-pronged. Firstly, your distributions, which comes from your rentals, and obviously that's the only thing that investors currently look at. But people forget that the second part of your return sits in the capital appreciation of your asset. And that's what brought into the equation. And it's difficult to quantify that, I accept that, but over time, and obviously in many research, and you can look at international REITs as well, the capital appreciation is significant over the long term. Property there's no more property. You can create more property, but at this stage, and we believe that existing properties are extremely good value. To replicate or replace the current assets that we have, your replacement cost is in the region of about 30% higher than what our assets were constructed at. And then also looking at valuations, current valuations are about 40% below what replacement cost is. To replicate what's already in the ground is extremely costly at this point, and especially with inflation where it's going. So we believe for institutional investors at this stage, it's an excellent investment to make.
I think we're getting deeper to the real nitty-gritty. I mean, we're talking about valuations, returns. These are very, and you talked about capital appreciation as well. From a real estate asset class, I mean, we all understand, and many people here are investors in real estate in some form or the other, from landed property to owning homes. So I'm sure there's a realization about the inflation edge and defensive nature, and the fact that property typically does not depreciate. But from a real estate asset class point of view, there's a bit of some divergence because the metrics is cash flow based and driven. So Patrick, I think I'd like you to shed a bit more light from your experience, and I'd like you to speak a bit to diversification of the assets you have in your REITs, and maybe plan to diversify further. I mean, what your philosophy there is. And secondly, more around the returns, capital appreciation. How have you been able to monetize that and demonstrate that to investors?
Thanks a lot, Tola. Before I answer the questions that you just posed, I'll sort of try to marry some of the comments that have been made before. The truth is that with real estate investment trust and real estate in general, yes, the quality of asset is extremely important, the lease agreement. But what are you actually trying to do? You're trying to measure what is the projected returns over a long period of time on a risk-adjusted basis. So, and the truth is that for most investments in Nigeria, real estate gives you the best returns on a risk-adjusted basis, because all things being equal, for instance, in the REITs we run, occupancy is like 95%, and you will always get some kind of a rent or dividend. So, but the main problem sometimes is not the fact that you get a return all the time. The main problem is the fact that the capital appreciation is usually more than the cash flow. And I will explain. So for instance, rental assets, usually how you squeeze them, rental, irrespective of what brand you're doing, whether it's residential, hotelier, usually you can make 10% per annum. So if you make 10% per annum on a rental asset, and you won't pay that to shareholders, the truth is that while you're doing good cash, the capital appreciation, you only get to realize it when you sell that asset. And that does not come very often. It comes once in 2-3 years or 4 years, and you don't want to flip in assets too often. But in the meantime, you have federal government bonds. For instance, the last one just closed at 15.2%, risk-free, tax-free. So the truth is that, in a way, federal government bonds and CBN treasury bills choke out real businesses like real estate, simply because on a risk-adjusted basis, they compete effectively. So there are two things that can be done to support it. One is that, okay, because real estate investment businesses have a lot of other social benefits, there's an argument to protect it a bit, just so that more capital flows into it. That's one angle. Then the other angle is, you now say that the truth is that over the last 2-3 years, it's been very good for real estate businesses. And that's because capital appreciation has come suddenly in the last 2-3 years for a lot of assets across board. In fact, you have to be working hard not to be making money in the last 2-3 years in real estate. But it doesn't happen all the time. It happens once in between 6 to 7 years. But the investors might not appreciate that, and the investors might not wait. So the argument I'm making is that over a 5, 6, 7 year period, real estate returns will always outperform even the treasury bills or the FGM bonds. But many times the market is not willing to wait that long. So maybe some investor reorientation or something in that manner. Thank you very much.
Thanks, Patrick. I mean, what comes out is the long-term nature of the asset, the defensive, and I think that is understood and should be appreciated. And I think it goes back to the investor education piece that we're speaking about. Oyinda, I mean, there's always a difference, and that calculation, you can see the difference between the NAV, and what is also the listed prices on the stock exchange. I mean, I think it's quite general for the market, but how does one? I mean, what are suggestions, both for the market, for the regulator, in how to possibly bridge, because that goes to the equity characteristic around it. How does one bridge that delta, or really stimulate seeing that return come true in the listed price?
Thanks, Tola. So I think obviously for starters, the structure of the REIT from the onset is extremely important. And if the structure is right from the onset, there might be a possibility to manage that gap. So in the first instance, we need more REITs on the market to sort of ensure that REITs begin to tow the path that we expect for that product as we see in other jurisdictions. Now there are things around, the market thrives on information. So I think, and something that we have seen in other jurisdictions also is that, for many of these REITs, they have a solid investor engagement department, as it were. And this is something that's, for a general mutual fund or a collective investment scheme, it's not very popular here. But because the real estate space is one that lots of investors still need to be engaged, I think it's important that information flow is made available to the market on developments within the REITs, things that are happening with the tenants, signing on of new agreements, and other expansions and other developments that are being undertaken within the REITs. It might not close that gap, but I think that a lot of information will go a long way to ensuring that the gap between the NAV and the market cap can be reduced. And another challenge is also around the liquidity of the product. Again, if there isn't, you know, if the securities are only held by a fraction of investors, there won't be any trading. And so there can't be any, the flow of information won't even reflect in the price of the units. So it's important that those products target a wide, you know, array of investors, both retail investors, high net worth individuals, insurance companies, the asset management companies, the pension fund administrators, and then those categories of investors are being engaged on a regular basis. And I believe that that information flow should, you know, go a long way in driving that gap down. And I think investors also need to understand, like Pierre alluded to, and Patrick also, you know, the return you get from the REIT product is different from a pure equity product and a pure debt product. And so when investors understand that, first of all, what REIT products guarantees, or what REIT products, you know, make available to you is a stable income flow. And when they begin to understand the way that product is meant to operate, I believe it will go a long way in driving the amount of trades and the turnover you see in the trading of the product.
Great. Great, thanks so much, Moinda. Oguchi, you represent a critical investor pool. You know, I would like you to maybe shed a bit more light in terms of expectations. I think it's useful that, you know, the developers and the issuers understand where you're coming from. I think there needs to be a bridge, and I think that is already happening. You drove a workshop session recently, and we're all speaking. I think the key theme here is we can see the assets. We know the economic realities. The assets are going nowhere. How do we, you know, create this institutional asset? So I think if you can just share a bit in terms of the work PenUp is doing, and also where the expectation from your own perspective that pension funds are looking for, so that we understand them and we can collaboratively work to create a solution around bridging the disconnect.
Thanks. I think a key issue is the information and the knowledge, which has been said by most of the speakers. You know, it's interesting to know what Pierre said, that, you know, if we do get involved in Novare's REIT, for instance, already we get a 40% upside, because, you know, the cost of replacement and the levels it is now is 40% from what we used to replace. So I guess that information, any investor will love to be able to jump on that. So I think the first thing is information sharing, and sometimes we operate in silos, and I think there has to be a deliberate effort to get, you know, the financial markets and the real estate market together, you know, in the same room. And, you know, I know your institution is doing quite a lot in that. Another thing is liquidity, I think, and, you know, I guess we must be, you know, honest with the fact that we haven't seen that much liquidity. And to the point when Ida said, you know, if it's just us 20 pension funds or 10 of them holding those same assets, then they'll look at themselves, okay, I need to flip, who am I going to sell it to? We're selling it to ourselves. So there has to be some more work, and I know SEC, NGX is doing more in terms of retail investors, high net worth investors. So the beauty of a market is that I can sell when I want to, and there's a ready buyer, and that's not happening with the REITs. Again, to the point of, you know, those stable income flows, which is good, but then they'll juxtapose it along with the bond yields they're getting, and it doesn't, you know, get them out of bed. But what they need to realize, and what we need to realize, is that there is a capital appreciation that comes, which, according to Pierre, yes, you cannot quantify that number, but that's investments, you know. So really, it's really about portfolio construction, you know. So with the pension funds, they might not get as much as 10, 20% of their assets in REITs, but even if it's 1 or 2%, you know, that 1 or 2%, you know, are there enough products, are there enough REITs for them to get to? And I know that, you know, those assets are there, and I think we need to work more into bonding those assets into tradable instruments like REITs that the pension funds can get into. There has been a sense that, you know, it's the guys from offshore that are taking the cream of real estate in Nigeria, and I think we need to do more to get some of the pension funds. And, you know, one of our trustees is here, and he's also mentioned that a couple of times.
Thank you. There are two things I'm going to take from there.
Okay.
Is the discourse around local capital versus offshore capital. Given the pool of capital that sits locally, and I do note that, some of the offshore capital that has come into the market are from pension funds elsewhere. How do we, and of course we won't do that, it's not a replacement, but how do we create that deepening of capital formation on both divides? And if we can shed a bit there.
Yeah.
And that's not just on risk, but they are just, yeah.
Yeah. So I think a key part is regulation, right? In terms of what pension funds are allowed to do in Nigeria. I mean, in some markets, pension funds can invest directly in real estate. I mean, there are pros and cons of that. So how is it possible for pension funds offshore to bring money here and buy real estate, sometimes directly? It's because of how they're regulated. So there is some point of regulation and advocacy that needs to go in. But I think not just with real estate, but general alternative investments in general is that, as a country, we need to understand, realize, and admit that with the pension industry, we are coming from a point where, there was a black hole, So when the law was enacted in 2004 and when we started investing in 2006, there was always an err to the side of caution. So we're moving from that, there's many restrictions to pension funds, and we're moving further down the road. And I think in the next couple of years, with a lot of advocacy engagement, we'll see a bit of loosening up and hopefully more local investors in real estates.
Thank you very much. You've added more in terms of regulatory engagement that we also need to have, seeing where the possible gaps may be. And I do know the regulators are quite engaging and supportive. Nova, I know you have a Pan-African fund, and I do note that the SEC regulations allow investment. I think 25% is allocated to offshore investment. So, is there, from your perspective, given what we're hearing, an opportunity to enable investors locally, possibly benefit some from of your offshore investments as well, given that possibility within the SEC rules in Nigeria? And then just on the back of that, how do you see your growth in the market? Utilizing local capital or offshore capital, and what your future outlook is from a general market perspective?
Yeah, thanks, Tola. So speaking quickly, maybe just remark on Gucci's reply just now. So from our point of view, and obviously you've seen across the globe that, again, real estate investment is driven by the institutional funds. Obviously Nigeria is in the infancy of that. Obviously I accept there has been REITs in the market for some time, but the industry needs to actually mature to that extent. I understand from a pension fund's point of view, it's very difficult to invest in, say, real assets, because you get compared against your competitors who are only investing in government bonds, and from an income point of view, it's a difficult comparison to make. But institutional funds have a responsibility towards the country to invest in real assets. Investing in government bonds, you are actually investing in just paying recurring expenditure of government. So it's institutional funds' responsibility to start investing in real assets that contribute to the economy going forward. Again, from a regulation point of view, regulation need to obviously make provision for that. And it seems to be going in the right direction, obviously, which is great to see. I think, Tola, we've been sitting in the initial discussions on the REITs in 2016, so it's been quite a long way from there, and that's great to see. And that needs to continue. And as soon as there's more regulation and more comfort from institutional investors in real assets, then you'll see the liquidity coming into the market, I believe. So on the Pan-African Fund, yes, we have assets in Zambia and Mozambique, which we developed and managed there as well. We are actually looking at a SADC REIT as well, so definitely opportunity to to diversify the asset base from a geography point of view as well. At this stage, obviously, it's difficult with the dollar illiquidity in the market. And again, regulations need to make way for that. I think will definitely come into the future. But at this stage, it's just to educate the Nigerian market and for Nigerians to invest in their own assets and take ownership of those assets, which is extremely important. And from our point of view, Novari's point of view, we obviously have the existing assets which we continue to operate. Look for, from in the REIT's point of view, look for quality assets in the market which we can expand the portfolio. But we also continue to develop new assets outside of the REIT, but then which are available at some point to contribute to that portfolio of assets.
Thanks, Rit. I know we're running out of time. But I just wanted to throw it open to the floor if there are any questions for the panelists. Any questions? There's a question. There's a hand raised up. How many minutes do we have? 3. Hand up. 3 more minutes.
Thank you to the panelists. My question is directed to the moderator, strangely. You mentioned that everyone here is aware of capital appreciation, but yet when we talk about investment opportunities to, say, a rate, the focus seems to be a comparison between treasury bills returns and the raw returns on rentals. If that were the case, how do you reconcile pension fund investments in, say, Michelangelo at the Santon, and that's from Old Mutual, and Westfield in London, and different hard assets with the position that you put forward? That is essentially my question. Thank you.
Thank you very much, Prof. I'm not sure what I put forward, but if I would. So I think what one was alluding to, which the panel tried to speak to, and I would like anyone else to jump in, is that there is clearly an inherent and visible and demonstrated capital appreciation that you will see in real estate assets and investments over the long term for a properly managed asset portfolio. I mean, it's also subject to economic cycles, but it is long term, it's defensive. Where there's been a bit of dichotomy, it's in that net asset value being seen based on valuation basis to listed price on the stock exchange, which is subject to other nuances. And I think we try to dimension that and speak clearly to it. There are initiatives that needs to be done to bridge some of that gap, but clearly there is a need for increased and continual investments in the asset class. I don't know if that helps to address your question, and if anyone else wants to add a little bit there.
Okay, thanks a lot. I think that was a very good question, and to address that, the truth is that some economist, I believe it's Modigliani and Miller, years ago won an award or won a Nobel Prize by just saying that most human beings, when they invest based on a risk-free return, and they now add risk on it. So usually, people would compare whatever investments they make with what the risk-free rate is. In Nigeria, the risk-free rate is quite high. For instance, you mentioned in America, I mean, apart from the last 2 years where interest rates have skyrocketed, their risk-free rate have always been 0.1, 0.2, 1%, 2%. So, and if you're investing in real estate in America, funny enough, and in most of these other places, you can easily make 10% on rental yield and a bit more on capital appreciation. But the difference is that their own risk-free rate, their own interest rate base is very, very low. So there's a huge attraction for them to move money into real estate. So, but in Nigeria, it's a little bit different. Our own base rate, our own risk-free rate is quite high. So it's sort of competing against real estate. And it's sometimes choking institutional real estate. So that's the difference as to why sometimes it looks as if the REITs abroad engage in more, sort of invest more in real estate, and in Nigeria is not as attractive. I think a lot of that is from the risk-free rate base that influences that decision.
Sorry, Tola, if I quickly can just apply to that. Patrick, I hear where you're coming from, but from our point of view is, yes, the risk-free rate is high, but we still believe the real return on real assets obviously exceed the risk-free rate. Otherwise, there's no investment case for that. And it's just due to, obviously, if we talk to the liquidity on the stock exchange, that's more a investor issue and investor education issue for participants to be more active in the market. I understand, obviously, as you say, that there are only a few players in that market, obviously, which makes it difficult. But then you don't get the real pricing of that asset, and that's the main issue. It's not that the assets are not valued and achieve capital appreciation, it's that the market doesn't perceive it that way. And then suddenly, as Patrick, as you mentioned, suddenly you have a huge impetus in the price, which comes sporadically, but when it comes, it's actually quite big. And that's where you actually get the real return. Once the activity on the stock exchange improves, obviously there will be more price clarification of the REITs, and hence obviously that will drive investor confidence, and then you will have an active market in the REIT shares. But from a real return basis, your distribution, which is obviously semi-annual in our instance, at least annually for a REIT, together with the tax dispensation that we're receiving in the REIT, along with the capital appreciation, far outweighs and outstrips the risk-free rate, to our belief.
Thanks so much. I think that I'm not sure we can take further questions, but I think that was quite deepful and insightful. Thank you for your time. You can feel free to reach any of the panelists or myself during the break. But thank you very much for listening.
Thank you for listening. Can we please applaud our panelists for doing justice to this conversation centered around institutional investment in West Africa. Now, one thing we must note today is that we cannot exhaust all the conversations here on stage. So please, during networking sessions, ensure that you ask questions. Let's take these conversations offline, and you can also tweet your contributions, tweet anything that catches your attention during any of the conversations. But we want to keep the conversations going because we cannot exhaust everything for these 2 days. Thank you again to our panelists, the very first set of panelists for today. Let's applaud them as they exit the stage. Thank you.